First off, congrats on making this decision to move forward with making one of the biggest financial purchases in your lifetime. Homeownership is amazing and has so many benefits and can really set you and your family up for a bright future. The home buying process can seem very intimidating and scary, and so we create this video to walk you through step by step on how to purchase your first home. I'm Miya, and I'm a realtor with Equity Real Estate here in the beautiful state of Utah, and I have helped so many people just like you looking to buy their first home. So sit back, take some notes, and let's get started. All right, so when you go to buy a home, I like to look at it as two aspects of the purchase. One is the home itself. Things like square footage, how many bedrooms and bathrooms are there, is it a single family home or is it a townhome or condo, things like that, Okay, and then there's the second part of the purchase, which is financial. How much is the home going to cost you? What fees are you going to have to pay? What is your interest rate? What are your monthly payments going to look like? How much do you even qualify for with your current financial situation? Now, there's a lot more that goes into the financial aspect than just the purchase price of the home, like $400,000 or whatever the price of the home is that you see on sites like Zillow or Redfin. So you're going to want to stay to the end of this video because I'm going to break down the costs of buying a home, including all the fees, closing costs, down payment, and what in the heck is earnest money, and so you know exactly what to expect at the closing table. So, I like to break down the home buying process into 9 steps. So here are those 9 steps, and we are going to go over each step in detail and what to expect at each point along the way. So, step number 1 is hire a realtor. Now, I highly suggest that you hire someone you trust because you want them to have your best interest at heart and do everything they can to get you the best deal and advise you correctly. A common complaint I hear about agents is that you try to call them or ask them a question, but then you never heard back, and that it took like a week or more before you even heard anything. Having good communication is the number one thing I would suggest you look for. Make sure they respond in a timely manner, explain things to you in ways that make sense, and they communicate well with others, and they have a team that they work with so that they can get you any answer fast. Especially once you get your offer on a home accepted, communication is vital and could save you or cost you thousands of dollars if not done properly. Now, there are over 17,000 agents in just the state of Utah alone, but over half of those only did 1 or less deals over the last 12 months. So I also suggest you look for someone that has experience and is closing deals. Every single deal is unique and things just come up. It's just the way it is. If that agent doesn't have the experience and knowledge, again, it could cost you thousands of dollars, and I don't know if that's really worth the risk just because your cousin is a realtor but does it part-time and you just felt obligated to use them. This is one of, if not the biggest purchase in your lifetime, so you want to make sure it's done right. Now, when you select and hire your realtor, they are going to ask that you sign a buyer-broker agreement. This is just a document stating that you are hiring them and only them to help you buy a home. Now, this document protects both you and the agent. For you, it outlines and holds the agent responsible to uphold to certain standards when representing you, the buyer. And for the agent, it allows them to give you their full and best service without fear of you abandoning them at the closing table for, say, another agent. It also does outline the compensation for their services to you, but I will tell you this, most, if not like all of the time, this compensation or commission gets paid to your agent by the seller, so you don't have to worry about that. But definitely talk to your agent about that and maybe the different circumstances in which you may have to pay for their help. So for step 2, you need to get pre-approved for a loan from a mortgage lender. You can always ask friends or family if they have a lender they have used in the past and like, or you can reach out to me, and I have plenty of lenders who I trust and would recommend. I do highly suggest you go with a local lender because they are the most knowledgeable about your local loan programs and grants that are available. If you do decide to go with an online lender like Rocket Mortgage or somebody like that, they likely are not aware of grants and programs for someone in your particular situation in your state. You can also go through like a local bank or credit union as well, because most lenders can do any type of loan. So for example, if you are military and want to utilize the VA loan, you don't have to go through the recommended lender through the military in order to do that. Again, I suggest using someone local to where you will be moving to. Lenders do charge slightly different fees here and there. So again, you will want to use someone you absolutely trust, but definitely shop around to see who would be the best fit for you. So each lender will want you to fill out an application in order to get a good look at your financial situation and see just how much of a loan they are willing to qualify you for. They would ask you for things like your last 2 paychecks, an employment verification letter, 2 years of tax returns, 2 years of W-2s or 1099s, and even get bank statements from you. This is totally normal, and they will likely ask for updated documents throughout the whole process. So just send over what they need in a timely manner, because it will just help make the whole process go smoother. They will need to do a hard credit pool, though, in order to get your credit score to give you an accurate quote on your interest rate and fees. If you do apply with multiple lenders, just know that you can have multiple hard pulls on your credit within a 45-day period without it affecting your credit score. So, depending on your particular financial situation and the loan type that the lender determines is best for you, this will affect things such as your down payment amount, which this can vary from 0 to 5% minimum. If you'll have to pay like PMI, which is a small extra charge each month to your mortgage if you do put less than 20% down. And if you meet different qualifications for programs that may benefit you in purchasing your home, such as like government money to help cover closing costs, or you can go towards your down payment, or even an interest rate buy down. Well, speaking of interest rates and buy downs, I just want you to be aware that interest rates are changing constantly, like by the minute. Once you get your offer accepted on a home and you're under contract now, you can then lock in that interest rate and keep that rate until you close, despite whatever happens to those rates in the market. So you'll definitely want to talk to your lender to see when they advise that you do lock after you go under contract. You can also do what is called an interest rate buy down, which is where basically you pay extra money to get a lower rate. This buy down can be permanent, meaning you will have that lower rate for the life of the loan or until you refinance. Or you can do a temporary buy down where you get a lower rate for a specific time, then it will go to the original rate after that period. A popular temporary buy down rate right now is the 2-1 buy down, in which you get a 2% lower rate for that first year, and then you get a 1% rate or lower rate for the second year, and then it goes to that original rate for years 3 through 30. So definitely talk to your lender to see what options or routes would be best for you and your situation. All right, so you got pre-qualified with a trusted lender. Now it's time to shop for that home. But before you start looking at homes, I do suggest that you make a list of what you absolutely need in a home versus what you want in a home. Needs are going to be things like the number of bedrooms or bathrooms. How big is the land for things like animals? Are stairs going to be a problem due to health issues? And location for proximity to work or schools. Also, think about the future and what you will need in a home that will suit those plans. Wants are going to be things like a pool or certain light fixtures or paint colors, or if you want like a walk-in shower instead of a tub shower combo. Those things can always be added or changed later, so they are not things you need right from day one. Now, that you have these lists, share it with your realtor, and together you will find a list of homes both on and off market that fit this criteria. Now, don't go and try and see 20, 30 homes that are available. It's honestly a waste of your time and your agent's time. I've had people take 2 steps in the house, turn around, and walk out before. You should be able to narrow your top ones down by the pictures, Google Maps, and just the information provided on the listing. So pick, say, your top 3 or 5 homes, go and walk through those ones. If you want to see others or new ones do become available, then you can then go and check those out. But you need to take a little time and see if a home actually fits your needs before actually stepping in them. Your agent should be able to gather more information beforehand as well if you have questions. Now, when you actually go and walk through the homes, I always tell my buyers to take notes on each home, such as things like pros and cons, how old are things like the water heater, furnace, and AC, how does the roof look, and just kind of your overall feelings of the house. Again, if you're really interested in the home, have the agent reach out to the seller's agent and get as much information as possible about the home so you can make a good informed decision. You can also go back the next day or so if you want a second look and maybe bring some friends or family along to get their opinion on the home. So, now that you have found the home that checks all of your boxes, you're now ready to submit an offer to buy that house. You will work closely with your agent to put together a competitive offer. There is a lot that goes into an offer, and there are many things you can do to make your offer more appealing. Some things that you can manipulate to make your offer stand out are things such as how much earnest money are you willing to put down? How fast can you close on the home? If you can waive any contingencies, and covering costs throughout the process such as HOA fees or a home warranty. Each buyer and seller's situation is unique, and the offer should cater to the needs of both you, the buyer, and the seller. Once you and your agent have created that winning offer, usually it will take about 24 hours to get a response. When the seller responds, it will be one of 3 outcomes. An acceptance, where the seller agrees to those terms you laid out, or they can reject that offer and just kill the deal. Or they can submit a counteroffer where they are essentially now making you an offer on something they want to change about your original offer. If a counter is offered and submitted, then you, the buyer, get to make that decision on whether you want to accept, reject, or counter that new offer. So, once both buyer and seller accept the terms of the contract, then you are now what is called under contract, or it's also called being in escrow. Now, the first thing you'll need to do is get your earnest money to your agent so that they can deposit that with the title company or with their brokerage. I will go into more details on this at the end of this video where we go over all the costs to buy a home. So the first 7 to 10 days of this under contract period is called your due diligence phase, in which you get to conduct all of your home inspections to ensure the home is in good working order. You will get a general inspection in which all of the major workings of the home will be assessed. They check everything from electrical to plumbing, your HVAC, windows, roof, basement, crawl space, assess the foundation. Go in your attic to ensure there are no signs of leaking or even damage to the trusses. And they will even test all the major appliances like the dishwasher, the microwave, and oven to ensure they are all working properly. In the end, they will give you like a 60-page report on the house and everything they found. Now, you have to realize they are general inspectors. If something comes up with the roof per se, you would then want to get an assessment by a roof specialist to assess the amount and type of damage and get an estimate on what it would cost to repair. There are other tests that the general home inspector can perform, like tests for mold, meth, or radon, but typically these are an extra charge. Also, during this period, you will want to talk with your lender and get homeowners insurance. Shop around, because prices on this can vary a lot. So definitely want to make sure you get a good deal, but also get good coverage as well. Okay, so people sometimes ask, did the home pass the home inspection? But it's really not a pass or a fail situation. Again, the inspector will just list out everything about the home, and then the buyer and the seller can negotiate any repairs. With some loans, though, like FHA and VA loans, they do have particular standards that the home has to meet in order for them to back a loan for the home. Things like chipping paint, handrails, exposed framing, things like that. They may get called out and have to be repaired before the loan can go through. So definitely repairs that are required by the loan need to be completed, but pretty much everything else is negotiable. I tell my clients to really focus on the major things like anything structural or the major workings of the home, like the foundation or things with the electrical, plumbing, or HVAC that are either a safety hazard or just not working properly. Also, things like broken appliances or broken windows should be negotiated. I really try to keep people from asking for things like dings in the wall or rust on a fixture. Things that you can easily just repair or replace once you move in. Most sellers are quite reasonable and want the deal to go through, so almost always the buyer and seller can work things out. Okay, we are almost there. This is the last big hurdle that you have to clear before you can actually sign and close on your new home. So the appraisal is a valuation of the home to ensure that the home is actually worth what you are paying for it. The lender is the one who orders the appraisal because essentially this is to protect them and not lend you, the buyer, more money than what the home is actually worth. If you were to buy a home in cash, an appraisal isn't necessary at all. It does take about a week to get that valuation back, which can be kind of a nerve-wracking time depending on the situation. Now, there are three possible outcomes of the appraisal. The home appraisal can come back at value, which means the appraiser valued the home for the same amount that you are purchasing it for. The appraisal can be above value, meaning the appraiser determined that the home is actually worth more than what you are paying, which is really the best kind of outcome that you can get because that means you are walking into a home with equity as soon as you close on the house. And the last outcome is below value, which means the appraiser determined that the home's value is less than what you are purchasing it for. Now, if this happens, there are a few options. You can negotiate with seller to reduce the purchase price to that of the appraised value. Or you, the buyer, can actually bring in more cash to cover that gap in the two prices. Or if the buyer and the seller just can't come up with a solution, the contract can be canceled and the seller can put the house back on the market. There is actually a fourth option of getting another appraisal done on the home, but there has to be a very good reason as to why the first value wasn't accurate, and the lender does have to approve this. Okay, once the appraisal is good and the lender gives you the clear to close, we can schedule a final walkthrough of the home to ensure everything is still the way it was supposed to be, like there are no new holes in the wall, things aren't missing that were supposed to be included, and they didn't just trash the house when they left. Also, use this opportunity to make sure all the repairs that were negotiated were completed. And now you have made it to the finish line and sign all the documents to officially make you a homeowner. Signing documents will happen at the title office set up by your agent. Usually the people that are there at your closing is obviously you, the buyer, your agent, the title or escrow officer, and sometimes your lender will also come. You will need to bring your ID and also your bank information so that you can wire your closing costs and down payment right after you sign, or they may even set it up so you can do this the day before. This does take about an hour to complete, but it's so worth it. Now, you don't get your keys right then at the title office. You do have to wait a few hours, sometimes a few days before you can get your keys. The money has to transfer where it needs to go, and also the deed has to be recorded with the county to officially make it so you are the new homeowner. And that's it. Once you've gone through these 9 steps, you will have successfully purchased your first home. I can't emphasize enough how important it is to have a great team on your side throughout this whole process to explain all your options and risks, have your best interest at heart, and someone who has your back through all of the negotiations. It's a lot. It really is. And there's potentially a lot of money at risk if something goes wrong. Speaking of money, let's go over the big question everyone has. How much is buying a home going to cost me? Okay, so there are 4 major kind of financial categories during the home buying process that you will need to know. The first is the earnest money deposit, which is usually around 1 to 2% of the purchase price and will be due within the first 4 days you go under contract. The second cost is going to be the down payment, which is going to be about 0 to 5% minimum, and this will primarily be based on your loan type that the lender feels best suits your financial situation. This is due at closing, so not until that last step. Third, you'll have your closing costs, which typically range from 2 to 3% of the loan amount and is also due along with the down payment at closing. This is where all the fees are calculated in, like the lender and title fees. Okay, and the last financial aspect of buying a home is some out-of-pocket expenses you may have to pay during the transaction, such as the home inspection. And if you do decide to build a new home from dirt, there may be additional deposits that the builder will require that you put down at different phases of the build. All right, let's dive a little bit deeper into these costs. So, the earnest money deposit. Now, the earnest money is just that. It's a deposit. You can get this back and use it towards your closing costs and your down payment in the end. Or you can get this money back if you decide to cancel the contract and not buy the home if you do this before your dates set in your contract. Or actually, you can lose this money if you decide to cancel the contract and not buy the home after those dates that are set in the contract. A good agent will remind you of those dates throughout the process to help protect your earnest money and not let you lose it. This is why I said earlier that the dates you put in the contract for your due diligence deadline and your financing and appraisal deadline are very, very important. If you need to cancel the contract before these deadlines, you will be all good. You get your earnest money back. No problem. If, for whatever reason, you need to cancel the contract after these dates, you will lose that earnest money and not get it back. This can be thousands of dollars because, like I said, earnest money is typically 1 to 2% of the purchase price. So on a $500,000, let's say, this is $5,000 to $10,000. So as soon as you get your offer accepted, you will need to write a check or a cashier's check and give it to your agent so they can deposit that with either the title company or their brokerage to keep that money safe. Again, earnest money isn't a fee or anything like that. It's just a deposit to hold the home for you, and you can get that money back at closing to use towards your closing costs and down payment. Okay, so speaking of the down payment, this is going to be paid at closing and typically paid via wire transfer right after you sign documents, or can even be done the day before if the title company gets you the wiring instructions. Now, the size of the down payment will vary based on the loan type that you are approved for. The minimum amounts you can put down will be 3 to 5% if you are using a conventional loan, as low as 3.5% with an FHA loan. And the VA and USDA loans actually have a 0% minimum down, which is awesome. You do have to qualify whatever loan you choose, and the lender will work with you to decide which loan type is best for you. Now, there are down payment assistance programs where you can basically finance your down payment, but you do have to realize you will be paying interest on this amount and paying it back. So these programs are not just like a freebie and giving you free money. There are what are called grants that are available that you don't have to pay back and is more like a gift, but most of these grants require very specific qualifications. Again, you can work with your lender to see if you qualify for any of these to help you out. Now, you do have to be aware that if your down payment is less than 20%, you will likely have to pay what is called private mortgage insurance, or PMI. This is a small fee that is added to your monthly payments, essentially protecting the lender if you so happen to default on your loan. You can get rid of the PMI by refinancing your loan later down the road once you have enough equity in your home, or you can actually just pay an amount at closing that will just pay for that insurance up front. But this option can be pricey, like anywhere from $5,000 to $10,000. All right, and now for the closing costs. The closing costs are usually added with the down payment to give a total cost that is usually termed as cash to close. The closing costs can vary depending on all the different fees, but typically it ranges from 2 to 3% of the loan amount. Towards your closing date, the lender will send you a document called the Closing Disclosure, or CD. This will have a breakdown of all the fees and charges that make up your closing costs. So actually, let's take a look at an example of a CD and how it breaks it all down. So this is the first page of the CD, and it gives you a summary of the loan. It tells you things like your total loan amount, your interest rate, what your monthly payments will be. Then you can see at the bottom here, it shows what your total closing costs are and how much cash you need to wire in order to close on the house. All right, so here on this next page, you get the breakdown of all the fees that make up your closing costs. You've got lender fees that include points, which buys down the interest rate so that it's not as high as what's currently offered on the market. And then you also have a processing fee and an underwriting fee. Next, you can see that the appraisal fee is part of your closing costs as well as the fee to get your credit report. Next, you have the title fees, which typically include this closing protection fee, an electronic document fee, title insurance, which will be the highest fee that you will pay, and then a settlement fee. If your loan type requires a pest inspection, that cost is also part of the closing costs. So next, here is this other cost section. You will see the recording fee for both the deed and the mortgage. Then you can see you will have homeowner's insurance, that mortgage insurance, if you put less than that 20% down as we discussed earlier. There's prepaid interest and usually prorated property taxes. Section G here is the amount of money that will go into the escrow account. Now, an escrow account is a separate account that your lender holds for you, where a part of your monthly payment that you make on your home actually goes into this escrow account. And then the lender will use this money to pay your property taxes every year for you. It's kind of nice that they do this for you to ensure that you have adequate funds each year in order to pay your property taxes. So just one less thing you have to remember and worry about. Okay, and then you can see Section F here shows the real estate commissions and fees. Now, a majority of the time, the seller will actually pay your buyer's agent their commission, so this does not come out of your pocket, which is very nice for you, the buyer. Typically, when a seller hires an agent to sell their house, the seller and that agent agree to a commission. The seller's agent then offers part of that commission to a buyer's agent to bring in that buyer for the home. So, a pretty good deal for you, the buyer, but you have to keep that in mind when you go to sell your home. All right, so here's a summary of all the costs, deposits, and credits to give you the grand total that you will have to come out of pocket at the closing table in order to purchase your home. Again, this amount is usually wired to the title company the day before or the day of your closing. Once all of the funds have been received and the deed has been recorded with the county, Then you get to have your keys to your brand new home. I know, that was a lot of information, but know that you have a trusted team on your side throughout the whole process and will help guide you step by step along the way. Always ask questions and make sure you fully understand what's going on. This is the biggest purchase of your life, and you want to make sure it's done right and you become homeowners. If you're interested in buying a home in northern Utah, we would love the opportunity to be a part of your team. So go ahead and give us a call, shoot us a text, or send us an email, and let's start to put together a game plan to get you your first home.